Let's talk to Ibrahim Babalola now, who's an investment analyst with AfriInvest. As the market winds down and investors get ready to start a fresh week, their eye definitely will be on the MPC meeting. It's the last meeting for the committee for this year, and quite a lot to chew over. A good morning to you, Ibrahim. Thank you so much for joining me on the program.
Good morning, Harriet. Thank you for having me.
So, Ibrahim, countdown to the MPC's meeting, a very crucial meeting. What are your thoughts? How is the market shaping up? Let's leave the markets first. What is your analysis? What do you expect from this meeting Monday and Tuesday? On Tuesday, of course, the decisions will be read out.
Okay, let's quickly look at, what's happened in the global front and domestic front since the last MPC meeting 2 months ago. On the global front, we've seen increased expectations of an interest rate hike in advanced economies, but particularly in the US. There's been suggestion that there may be an interest rate hike by the US Fed. I think the Fed fund chief yesterday even confirmed that it might be sooner. Also, we've seen the emergence of Donald Trump and the uncertainties regarding his economic policies. On the domestic front, key macro indicators have continued to weaken since the last MPC meeting. Several released economic data continue to highlight the challenges that have affected the country over the course of the year. As you mentioned at the start of the program, we've seen a persistent rise in prices. Inflation has galloped to 18.3% year-on-year in October. By the time the MBS releases the GDP numbers for Q3, I believe it's just going to confirm that the economy is still in a recession. Capital importation for Q3 fell 3.7% year-on-year from 2015, even though there was an improvement quarter-on-quarter. But when you do a year-on-year comparison, it still performed poorly. Capital markets in the last MPC meeting hasn't been good as well. The equities market has declined about 9.3% since the last MPC meeting. The bonds market has remained soft as well. We've seen investors stay at the shorter end of the curve on the back of the attractive yield environment. But even with the attractive yield environment, return of foreign capital has not been as swift as anticipated, as we still have our challenges in the FX market. There's still the overhanging currency risk that continues to weigh on foreign investor sentiment. So at this MPC meeting, we believe that the challenges in the FX market would be a priority on the discussion on the items to discuss. As majority of the current challenges stem from the glitches in the operations of the FX market. The FX market has continued to remain challenged despite the flotation of flexible exchange regime. So we believe that the MPC meeting would be discussing this, because failure to address the currency risk will lead to further divergence between the parallel and the interbank market rates, further pressure on general price levels. So we must say inflation continues to gallop if this is not addressed. It might end up seeing a hike in petroleum prices as well. That might be inevitable as well, So all these will ultimately defeat the monetary policy objective. So at the end of the day, the MPC would have they'll have to choose between either maintaining status quo or hiking interest rates.
So we're looking at sorry to cut you there. So looking at those two issues, maintaining status quo or hiking the rates, do you think that there are any new monetary policy tools that can be deployed at this time?
We think that they're going to maintain status quo as hiking interest rates, will further pressure lending to the real sector. Foreign investors are not going to come into the market because the yield environment seems more attractive. But a meeting with some foreign investors during the course of the week, and they were telling us that, okay, your yield environment is very attractive. You can get 15, 16, 17%, right? But the liquidity problems in your FX market are still there. Would I rather make 1% in the US, knowing that I can take my money, I can take my money whenever I want, or make 15% in your market, knowing that at the time I want to repatriate my funds, I might not be able to on the back of the liquidity constraints you get. So we believe that the MPC would not hike rates at this meeting. We believe that they will maintain status quo as the challenges are now they're now ones that you need to address using administrative measures. A bulk of addressing this issue it lies on the hierarchy at the CBN, you know. So we think they're going to maintain status quo.
All right, Ibrahim, thank you so much for joining me on the program because, of course, you did speak to maybe new monetary tools that the committee should be looking at this particular time. But thank you so much for your perspectives. And, of course, next week we have more conversations around this particular issue. Do have a great weekend.
You too, Harriet. Thank you, man.
Well, Business Morning returns in just a moment. When we come back, we'll be focusing on a very key sector of the economy. We're talking about the oil and gas sector. Just this week, the Ministry of Petroleum Resources held a consultative stakeholders forum in the nation's capital, Abuja, focusing on a new national oil policy and new national gas policy, of course, which is part of what's being talked about since the launch of the 7 big wins. We'll talk more about it. And, of course, we'll remind you of our poll question, which has been running for most of the week. We'll still talk about it, and then we'll continue and tell you what we're proposing for next week as well. Stay with us.